Welcome to another episode of Transmission. Today I'm here with Reggie Middleton of Veritaseum. How's it going, Reggie?
Fine. It's going fine.
Excellent.
Yeah,
Good to
you
hear.
threw me off. You said Ray Middleton, but I was like,
I,
I was waiting for him to show up.
I said Reggie Middleton.
Reggie, okay.
Yeah, Reggie Middleton. Sorry, misheard. Okay, great. So, I want to ask right off the bat, what is Bitcoin?
Well, when you ask me, you usually get a different question from when you ask everybody else. I define Bitcoin as a platform that is designed to make peer-to-peer transactions, whether it be value, consensus decision making, uh, or the permanent recording of data or information. Now, of course, this is very different from the typical media explanation of a digital currency or, you know, a commodity, etc. It could be considered a commodity, but a commodity that is heretofore different from anything else. Um, Bitcoin is a protocol-based platform, very similar to the internet. So you have the Bitcoin protocol, BP, and I consider that now it gets to the internet protocol, IP from TCP/IP. And on this platform, you can create, paint a tapestry of all types of um, transactions, of applications, of platforms. Um, Calling Bitcoin a digital currency is the same as calling an internet an information packet. Um, you know, Plain and simple from my perspective. So digital currency is a application built upon the Bitcoin protocol, and it's an interesting one, an ingenious one, but it's literally just the very, very tip of the iceberg. Just like FTP or email is the very, very tip of the iceberg of the internet. From the FTP email back in 1993, 1992, we now have things such as um, Google Voice, YouTube, Facebook, and various applications that are so diverse and advanced that most people don't even realize they're using an application. This communication is going through the internet protocol and someday may go through the Bitcoin protocol as a transmission of value, voting through the Bitcoin protocol, etc.
All right. Yeah, that's great. Yeah, it all has to do with communication, like you said. Well, there's a lot of talking lately about blockchain technology, distributed ledger space, etc. And a lot of companies trying to, or not trying, they're just separating Bitcoin from the blockchain technology. So, first of all, what is a blockchain? And what do you think about companies using a private blockchain for their own uses? And does that make sense to you? And so on. Just some comments about that.
Okay. Well, I guess from I'm a strategist, a technologist, but I'm not a software engineer or a cryptographer. So from an economic and a strategic perspective, let's nail down some semantics. Um, you can no you can no more separate Bitcoin from its blockchain than you could separate information packets from the internet. That's like saying I'm going to take the internet, but I'm going to separate the information packets out of it. Well, you could, but then you won't have the internet and you won't be able to use it. Um, so Bitcoin is a token that's used on its blockchain or a blockchain, and the blockchain is a distributed, which means it sits on several different locations. Consensus, meaning it works on agreement with more than one party. Database, and this distributed consensus database allows the Bitcoin platform to do some amazing things. It's actually an ingenious invention that it solves the Byzantine general problem, which basically allows you to have a transaction somewhere in, say, Germany, and that transaction could be considered valid in the US in almost real time. That was never possible before that I know of, because if it happened in Germany, particularly if it was digital, someone can always do it somewhere else in a very short amount of time, and it wouldn't be um, known until somebody came up short in a transaction. In other words, I could spend one red digital dollar in Germany. If I take that same red digital dollar and try to spend it in New York or in Brooklyn, that same digital dollar would not spend because it's already considered spent, the double spend problem. This allowed a lot of creative people to do a lot of creative things that couldn't be done before. Now, private institutions are trying to separate that ability from the token. But that ability is only possible because it has a token. The reason why Bitcoin is being attempted is being people, the reason why people are attempting to separate Bitcoin from the blockchain is because of the media. When the Bitcoin technology is mentioned, it's mentioned as being used by drug dealers and money launderers and pedophiles and hitmen. Um, Everything negative has been broadcast, the fall of Mount Gox, etc. So Bitcoin is considered bad. So instead of saying Bitcoin or Bitcoin blockchain, they're trying to say blockchain. But it does show a certain level of ignorance or marketing savvy. It all depends on which way you look at it. The the use of private blockchains is something that is inevitable because the first movers in this space is an industry that's usually served first movers in many technological spaces outside the technology companies, and that's the financial industry. These entities, their business is based and predicated upon opacity and I guess you could call it privacy, but again, that's two sides of the same coin. They need the transactions to be private because if they were public and known, then they couldn't put pricing margin in. For instance, if you want to go and create uh, an option embedded total return swap, okay, you have no idea how to do it. You have no idea how to put it together. So you go to big investment bank A to purchase it and they put it together for you. They load in a 15% profit margin. On top of that, they throw an extra 10% of fees. And then there's a 8% gateway to get in and then get back out. That's a very profitable deal for them. Okay. And of course, you pay it. You don't even know you're paying it. You just know you put money in, you get less out. Or if the deal goes your way, you put money in and you get 10% out. You just didn't realize that, your position moved 40% in your favor is the bank took 30% and gave you 10%. Now, if there was transparency, then you know exactly how that product was put together and you know exactly how much you should get given each basis point of movement, what the fees are, etc. That would make that investment bank, which is the intermediary or the go-between, um, it would make it very difficult for them to make an outsized profit. Okay. So the more opacity in the transactions, the greater the potential profit. The Bitcoin protocol network, the public network, is one of the greatest attributes is transparency, pricing transparency. Everybody knows how much everything costs, location, evidence of funds or assets, etc. So that is the antithesis of what the bank's business model and profit margin model looks like. So with that being said, it's understood that they would want private networks. The problem with private networks is no matter how successful the private network is, it's still private, and but so many entities are going to use it. And there's this concept in macroeconomics called the network effect, where basically the more people that use something, the more valuable it is. And the more valuable it is, then the more people that want to use it. And then when you have more people use it, then it becomes more valuable, and that additional value draws more people, et cetera, et cetera. That's why the public internet, which is what we're talking through right now, is much more valuable than any private intranet there is. And a private intranet or intranet is basically a closed off private version of the internet. And they're very useful. All big companies use them to send intercompany email, or at least they used it. I'm sorry, they used to use it to send an intracompany email. But whenever those companies really have to do anything of value, they are forced to go to the public internet. And the reason is the network effect. More people use it. There are examples of the network effect all over the place. Another example would be Microsoft. Microsoft is a very powerful company, very successful company, and the only technology company that has successfully stayed on top of their field through two paradigm shifts. The paradigm shift being a major tectonic shift in technology and the way things are done. Microsoft um, presided over the switch from mini PCs to actual micro PCs. I'm sorry, mini computers to microcomputers, or microcomputers being PCs. They also survived the shift from PCs to the internet, not quite as profitably as before. The reason why they're able to do that is that they had a cash cow, two cash cows, and their cash cows were number one, Windows, and number two, the Microsoft Office Suite. And the reason why these cash cows were able to propel Microsoft through these paradigm shifts, despite dozens of blunders, multiple blunders, despite an attack by prosecution by the Department of Justice, and competition from all 15 sides, is they had the network effect. When you use Windows, Windows became a platform because so many people used it. It was the de facto standard. Because it was a de facto standard, when you go and buy a computer, the first thing to buy was Windows. And because everybody bought Windows, the de facto standard, on and on. Same thing with Microsoft Office. When you create a spreadsheet, nobody says I'm going to create an open office spreadsheet, or very few people said that. They don't say we're going to do Lotus 1, 2, 3, or they did at one time. You
Yeah.
know, the spreadsheet is Excel. As a matter of fact, people don't even call them spreadsheets anymore. They say Excel. When you want to create a word processing document, they say Microsoft Word. The reason why
Yep.
so many people default to these is because everybody else used it. It had much more utility. When you had to send it somewhere else, that other person had Microsoft Word. That's a very, very important concept. When you have a blockchain-based product or transaction or service or even concept, it is so much more powerful when you transact. The person or the entity on the other side is in that same ecosystem or same platform.
Right. So
That
you're
makes it
saying that Bitcoin could be like have this similar network effect as Windows, not Open Office, Word, Excel, and I think at one time Xerox had the similar thing, but it slowly went away. You said, "Yeah, I want to Xerox that."
exactly. I think Bitcoin is well on its way there. I mean, it does have competition, has competition with, or has potential. I guess you could say it's competition or potential. The entire industry is young, but there's Ethereum, and there's the Open Ledger project, and there's the R3C3V, Receive, the consortium of 42 banks, etc. But um, at the end of the day, the most tested, most tried and true is the Bitcoin platform. Now, a lot of the newer um, products are building additional functionality on top of Bitcoin. Um, and they're done by very smart people. But the functionality and the capability of the Bitcoin platform has not been taken advantage of to its fullest extent by any entity that I know of. For instance, our company, Veritasium, has been running fully full functioning swaps on the Bitcoin network, directly on the Bitcoin network, without any tokens or anything else since December 2013.
All
The
right.
first swap settled in December, and it's been running for almost 3 years now. Oh, wow.
Okay. Yeah, well, that's yeah. Time goes by fast. All
Yeah.
right, well, let's yeah. All right, well, let's get into that. So you mentioned that Veritasium, you can use swaps on there, and that you already had it going back in 2013. Also on the Bitcoin blockchain, and without the need for a native token. So some of these other platforms, you have to buy another coin in order to use these different layers on top of the blockchain, and it gets kind of complicated for some people, and it creates a little bit of friction, in my opinion.
Mhm.
So I think that's what one of the things I really do like about your project is you don't need any of that. You can just go right into it. So just tell me, real basically, what can I do with Veritasium?
Well, currently you can buy and sell exposure to any publicly traded financial asset that doesn't have a time-based component in its ticker. So almost any stock. We have about 45,000 tickers in the database. Any stock, bond, commodity index, any index actually is published in any geographic bourse or exchange. So the New York Stock Exchange, the LSE in London, Japan, China, all over the world, Africa, etc. You can do it without going through a broker. So you don't need Goldman Sachs, you don't need Charles Schwab, you don't need an exchange, you don't go through exchange. As a matter of fact, all you need is your own Bitcoin because it's Bitcoin in and Bitcoin out. And you get exposure. You could have the exposure turned up through a digital leverage. So you can get much more bang for your buck per movement. And you are able to do it without counterparty risk or credit risk. You don't have to worry about the exchange going down, the bank going broke, the other person not paying, etc. Because if you remember, one of the attributes of the Bitcoin blockchain is a double spend Byzantine general problem is solved. So once the assets are put up, it goes into a smart contract. You agree on the terms. I want to sell, X amount of US dollar exposure and receive X amount of Facebook exposure, which is the same as buying Facebook stock from uh, value exchange perspective. You
Hmm.
put all the terms in, the amount, expiration date, when you want the contract to cancel, if nobody took it, leverage, etc. Somebody takes it on the other side and it's locked in. You couldn't break it. The other side couldn't break it, even if they wanted to. You don't have to know who the other side is. You you know uh, you don't have to be able to trust them. You don't have to run credit checks, etc. Now there are some changes that are being made because now there's some rulings that have come in, and so we're having a variety of things done, such as identifying the other side, counterparties, etc. And this is done. It gets a little complex. So I'm not going to go into it, but this is done to make sure that everything is legal in every jurisdiction that we are aware of. That is the product as it stands now. It's a heavy client, a Java download, not truly heavy. It's like 29 megabytes. We are now working on taking that prototype, which is not truly a prototype or proof of concept. It was a prototype and proof of concept, but it was also fully functioning in the end. You could do the trade. The trade's cleared. It worked just like going to a broker. Um, we're taking that and we're making it HTML based. So now the client is now a web page. And that's a web page that runs in any of the modern browsers, such as the Microsoft Edge browser, um, Safari, Chrome, Mozilla, and the mobile versions of those as well. And what's unique about that is it still keeps all the attributes. Um, the Veritasium system is fully distributed. And when I say by fully distributed, it is ultra decentralized. If you go to a bank like Citibank or a broker bank such as Goldman Sachs, those are centrally hosted wallets. The Bitcoin community knows what that is, but the regular layperson may not. But basically, it's an electronic depository and repository of assets. You send your assets to them. You relinquish ownership of those assets. You relinquish possession of it. You relinquish control of it. And they keep it in their electronic vault along with everybody else's commingled. If that vote gets hacked, you lose it, and they lose it as well. If you have a disagreement with them, they can take it. If the government has a disagreement with them or you, it could be confiscated. Our system does not keep any of your assets at all. Veritasium servers never touch anything. Your assets are always in your full possession, always under your full control. You always have full ownership of them, unless and until you enter into a smart contract with another party. Then that possession and control is relinquished and given to the blockchain. You still have ownership of it, but you don't have possession and control. And that possession and control now is decided based upon the parameters of the smart contract, which you voluntarily and willingly entered into. A total sea change and as compared to the way things are doing now. A simple way of looking at this is peer-to-peer capital markets. When you have peer-to-peer file sharing, where you could take an MP3, share it directly with somebody else, you didn't have to go through the record store or Sony, etc. You can now do peer-to-peer capital markets trading. That means lending, investing, securities underwriting, the whole spiel, whatever you want.
Okay, great.
Um,
I just want to ask something from a real basic perspective. Could I do something like, let's say I'm not really a trader, but let's just say I'm a average Joe, could I do something like hedge my heating cost risk, or maybe hedge the cost of gasoline or electricity if I think that's going to go up and I want to, insure myself against the rise of that? Could I do that on the Veritasium platform for a low cost compared to other ways of doing it?
Yes, the only thing you need is somebody to take the other side.
Right.
So if you believe that if you're suppose you're way out in the country in the Midwest and you use liquid natural gas LNG, and you feel that LNG prices are going to shoot up because oil prices went down, started to go up some, and you think that LNG is going to go up as well, you can lock in that price by selling LNG and buying exposure to US dollars or oil or whatever else you want to sell the exposure for. You then um, have another counterparty, suppose your next door neighbor who thinks you're an idiot, and he says LNG is going to go down, not up. And so you have opposing views, you enter into a contract, and that exposure is locked in. Okay, you're effectively hedged. Um, Now, as it stands now, you still have exposure to Bitcoin price volatility, and you have to accept that. There are ways where you can mute that. For instance, you can lever up. And so if you want $100,000 worth of price exposure, you put in, say, $10,000 of capital and you dial in 10 times leverage. And now the price of LNG will move at 10 times the rate of the Bitcoin price, which mutes it significantly. Bitcoin is volatile, but it's nowhere near that volatile. And our in future additions to the product will allow you to lock in the Bitcoin token, to other assets, with the first one being the US dollar, the second one most likely being the euro. So people who feel more comfortable in dealing in dollars can do that as well. And of course,
Okay.
you can always swap out Bitcoin price volatility as well, doing another contract, and then you're locked in as well.
Right. So I could already now, as it is, just make another contract on the side to hedge the dollar value of my Bitcoin that I'm using for the other contracts. But in the future, you want to have that kind of as an option built in, right?
Right. Right. In the future, you'll have Bitcoin as a token locked into the price of US dollar. So it's essentially
Mhm.
trading US dollars. There are
Mhm.
pluses and minuses to that, but it's a trade-off.
Right. Well, maybe for now, maybe in 10 years, it'll be a different story. But for now, a lot of things are priced in dollars and might be easier for a lot more people to understand. And who knows what the Bitcoin price will be like, if it'll be as volatile as it is now or not. Nobody knows.
Yeah. To be absolutely honest, the volatility of Bitcoin has quelled and died down a lot.
It
Um,
really has, hasn't it?
yeah,
It really
yeah.
has.
If you compare it to the ruble, it's less volatile than the ruble and less volatile than the euro for quite a few time periods, depending on when you pick the time period.
Definitely. Okay, well, I was checking out your blog. I'm going to pull it up. And I saw a real interesting post about the real estate market. Now, everyone remembers from the past crashes how the real estate market played a big role in that. And I noticed that you are talking about possibly adding some kind of real estate product to Veritasium. Is that right?
Yes, remember, I explained Veritaseum as an overlay on top of, or maybe I didn't, but Veritaseum is a
Hmm.
smart contract overlay on top of the Bitcoin blockchain. And as such, the value trading platform that I explained with the tickers is our first product, and a very powerful product that basically um, allows you to circumvent banks and brokers and everything else, but it's still just a product. We have other products in the pipeline, about a dozen of them. And these products use the exact same technology and exact same methodology, but with different tweaks. And the product that you're referring to allows entities to create a smart contract that replaces the legal contract, the legal real estate closing contract. What's special about this is that smart contracts can be programmed. And so the contract can contain the actual value of the funding. So it contains the money. The contract is now the money, and the money is not a contract. And to explain how that works, imagine if you had dollars, and the dollars were scripted to and programmed to say, I want to buy a house for $250,000, a house is described as yellow, worth at least $250,000, and it will be purchased with a loan with a 70 LTV, 70% LTV, at 6% interest rate. As long as all those parameters are true, when that money is given to the other side can now spend it, you move into the house at the closing. This closing can take a matter of minutes versus a matter of weeks or months. And it's very safe because let's suppose the house is not yellow, suppose it's not good condition. Even though the money has been passed, it can't be spent because the parameters of the contract have not been valid. And so there's no incentive to defraud. As a matter of fact, there's a disincentive to defraud because you can actually lose money on it and you can't walk away and making financial gain or economic profit from the other side. So those parameters I explained can be expanded, and they can include parameters for title. Title insurance has to be okay. Um, the loan can go through as planned. Interest rate, credit score, etc. The appraisal comes in at the amount, commission, brokerage fees, etc. So we we're going to automate the real estate process as a contract and basically revolutionize real estate closings. Imagine real estate closings occur as fast as Bitcoin settlements, anywhere between 5 and 40 minutes. This can we have products that we're introducing or plan to introduce, shall I say, to the medical field or medical contracts, real estate contracts, insurance contracts, privacy contracts, music contracts. The world's the limit, basically. What we want to do is our business model. A lot of people think of our business model as an exchange, which is very far from the truth. If it's an exchange, it's an exchange of value and information. What our business model is we eliminate the middleman. So anywhere where there's anything or anywhere where there's a middleman that is charging a fee for a service that does not give the requisite value for that fee, they're a target. So we automate it and we make a smart contract out of the transaction and we eliminate the need for the middleman and let the two entities deal peer to peer directly. And in doing that, we
Okay.
make the world a better place, a faster place, a cheaper place, and a more safe place.
Okay, right on. Okay, well, speaking of that, we do have a question from the Start Chatter Telegram group that are the guys at startjoin.com. And I just, asked them before I went on if they have any questions for you. And here's an interesting one. And I think that, maybe the ride share market will become peer to peer eventually, but I think we're a long way off. And it kind of has to do with that. So the question is, how do you feel about GM moving into the rideshare space? Bold move, challenging their own business model to adapt, in my opinion. So, what do you think? Any comments about that?
I'm not really familiar with it. This is news to me. The rideshare space in being the Uber model.
Exactly. Uber, Lyft, where, so yeah, there's a lot of discussion right now because I think that a lot of the Uber drivers are, I think some of the Uber drivers want to unionize, actually. I don't remember if it's in New York or not, but, there's come a point where they're not happy with how it's organized. And I think there's going to be some competition coming in. Now, I don't know if that's going to be good for the drivers or not, but it sounds like GM is getting into the rideshare space, and
Well, I can expound upon my personal knowledge and
mhm.
where my business model fits in. I'm an Uber customer, and I spend a decent amount of time in at least three of their markets: the New York metro area, the DC metro area, and the Miami metro area. Um, Uber is one of those situations where you're like, damn, why didn't I think of that? Extremely simple. You know, everybody has a portable computer that has a portable GPS system and telecommunication system. You add it together, that's the entire Uber business model. I'm sorry, the entire Uber platform. Uber basically leverages the inventory and the capital assets of other entities for their profit. So does Airbnb. Good for them. It might seem unfair, but there was a whole inefficiency in the system when they plugged it. Okay, and they've are making a lot of money both in terms of um, market value, and I'm assuming in terms of revenues, even though they're running at losses, but they're running at losses because they're a startup and there's a lot of people clipping on the heels. Now, whenever you have something or somebody that's successful, when you're making money, guess what? A lot of people are going to form around you and try and take that money. Uber has a lot of competition. In New York, there's GETT, which has cut prices significantly. There's Lyft, and there's a company called Arrow, which basically is Uber for the yellow taxi cabs, which is something, of course, they should have done a long time ago. The reason why Uber is so powerful is because there was a significant inefficiency in the market. I mean, significant. People are still doing dollar bills, paper receipts, calling cabs, hailing cabs, cabs going by, not picking up certain demographic groups, not willing to go to certain boroughs, etc. Now, Uber's efficiencies are so great in Miami and Fort Lauderdale, I can pull into an airport and Uber would take me from, say, Miami International right outside the South Beach for $17, and a cab would charge me 39 and, take about twice as much time. Uber's competition, right, is now coming in, forcing them to cut prices. Uber has the network effect in its advantage, to its advantage. But Uber's network effect is very different from the network effects that we discussed earlier. Uber has supply side network effect. So what Uber did was they had control of the cabs and the drivers. And because most of the drivers work for Uber, when you call a Uber shows up almost instantaneously. Okay, that's something that um, the other competition does not have, except for Lyft. Lyft is close. Uber has demand side network effect as well, the actual users, but that network effect is very weak. It's not truly the network effect. What they have is a lot of demand side. Users can switch from Uber to Lyft almost instantaneously. There's no barrier because the whole world is not using Uber as a platform. They have a brand name value, but they don't have the demand side network effect to the point where they could choke anybody off. Microsoft Word, if you want to send a Word document, chances are everybody else is going to better use Word. If you use anything else, even an HTML document, certain people may have a problem opening it up. Microsoft has demand side network effect, by far the most powerful. Now, because Uber has supply side network effect, the way what Lyft is doing and getting everybody else, they're all competing for the driver. What you don't see when the drivers are striking is that the drivers are being um, sought after by all the other companies. What GM most likely is doing is saying, listen, we can attack them on the supply side. Well, we can attack them by building our own supply side network effect because we have cars. Okay. That's something that Uber didn't take into consideration. Uber's business model is logistics. Their first product is cabs. If I'm not mistaken, Uber is also trying to get into food delivery. They're trying to challenge FedEx and UPS by doing package delivery, but most likely, I'm assuming, same day. Mm-hmm. But they have to run very, very quickly. And if they don't run quickly, then they'll succumb because they don't have that demand side network effect. Now, what does this have to do with Bitcoin? Bitcoin is a value trading platform. Okay. It is lightweight. It is very inexpensive. So what the next step for Uber cannot wait for Google to get its driverless cars, past legal in operation. Once Google does that, Uber probably already has the largest, order in for these cars. Uber can eliminate the need to have the supply side network effect by, eliminating the need for the supply side. So instead of leveraging drivers, okay, capital assets, Uber will actually pay for their own capital assets, the cars, but eliminate the drivers. And now transportation is fully software and hardware enabled. Okay. If you
Talking about
have
automatic, excuse me, you're talking about automatic cars, right? Self-driving cars.
self-driving cars,
Yeah.
if you had Uber and you had Google self-driving cars, it truly, truly relegates owning a car to a luxury. It would actually be much less expensive to Uber a car and have the car come pick you up. So you hit Uber, you say, pick me up at 123 Main Street. I'm going to 14 Adams Place. The car comes without a driver, picks you up, drops you off. If it had the same liquidity that Uber has right now with the drivers, it would be much more expensive to have a car and much more cumbersome. Now, if you had a Veritasium wallet, okay, and you're sitting in a car, you can actually call the car and pay for it through your Veritasium wallet. If these cars, suppose you're in a rush and you want to get picked up now, there's only three cars and four people bidding on them. You could take your Veritasium wallet, you can overbid the others. Say, I want to bid instead of $9 for the trip, I'm going to bid 9.50. Then that car comes and that car picks you up because it's a 50 cent additional profit. Okay, this
Right.
bidding cannot be automated, just like the peer-to-peer exchange is automated in Veritaseum for, stock exposure, bond exposure, etc. And now you have an autonomous, intelligent, smart contracted payment system that works right off your HTML wallet, and you could use it for bid these automated cars. You can actually do it right now with a non-automated car. The reason why the drivers are striking is because Uber is taking too much money. You could
Yeah,
actually enable the
exactly.
cars.
That
Yeah, you
was
can
the
enable, right.
that,
You can enable these entities to go peer to peer, and then you don't need a $50 billion Uber. Imagine
yep.
if these companies now were able to contract directly with each other peer to peer and you, the user, without Uber. They're 30% extra in their pocket.
Yeah, definitely. Because that's the that's the I didn't do a whole lot of research on what the drivers are saying. Actually, I just read the article yesterday, I believe. Someone tweeted it at me. And yeah, that's what exactly what they're saying. They're saying, Uber, you're taking too big of a cut and you're lowering our wages so that Uber rides are cheaper, but we don't have a say in that. Where if it was peer to peer and bid based, then you know they would everyone the drivers would get more of a cut if it was peer to peer. Definitely, yeah. Not only can the people using the driverless cars or the cars with drivers bid, the drivers could hedge their gasoline costs or other costs as long as they found someone for the other side of the trade. So you could have both parties using smart contracts in an intelligent way in that case.
I am confident that if I had a consortium of drivers approach me, I can build that system, um, I'd say within quarters, as in, multiples of 3 months. Um, quite confident. To be absolutely honest, the drivers do not take more of that 30% cut. Each driver becomes their own Uber. So the driver takes the entire cut, 100%, and as a true independent contractor, now um, pays his expenses. Uber is benefiting from the driver treating drivers as independent contractors, but forcing the drivers to act like employees. The drivers, through a peer-to-peer contracting system, can actually be true contractors where they take 100% and then they pay expenses out. These expenses are now minuscule because the contracting fee is a matter of basis points or satoshis, and the major expense would be fuel, insurance, etc. Now, as for trading, they can not only trade fees with the client, they could trade shifts. So suppose the driver works an 8 hour shift, a 10 hour shift, he did well, but the rush hour is coming up and he's tired. He can now trade that rush hour shift with another driver through the same platform, and he can say, you know, I expect to make, or this shift usually makes $300 for the next 4 hours or 5 hours. I'll sell it to you for, whatever the price is. Say, I
Right.
sell it to you for $50.
So he's basically selling his shift for a premium for you
Exactly.
to, yeah,
Right.
exactly. Okay, that's an interesting concept. I mean, back in the day when I, was young and I worked in some service jobs, that's what happened. I'll give you $20 if you come in for me tomorrow morning. So you
Right.
were, it's the same deal. But yeah, I definitely see that as a really interesting use. I think that those are very good uses, practical uses that we could have. So I heard that you're doing a round of funding. Tell us about that and how people can get involved.
Okay. Well, the stuff that we're doing, hopefully it sounds exciting. And the implementing is exciting. Unfortunately, it's not free. And it's not even close to free. It's nowhere near free. And so we're doing a round of funding to move to implement and put out the new client, which we expect to do by the end of the quarter, and to start building on additional functionality of that client and these new products, such as the real estate product and or the peer-to-peer driving situation I just expounded upon. Um, I'm looking to open this up to everybody, but because I live in the States and because there's a myriad of regulations, we have to step carefully. But basically, I want to open it up to accredited investors and non-accredited investors through equity crowdfunding. Um, I have made, I'm in discussions with several portals. I haven't got a firm yes. I got a yes, but I haven't got an official yes, so I don't want to announce it. But anybody who's interested, I advise them to contact me directly. You can email me, Reggie, Reggie, at Veritaseum.com, or you can reach me via Twitter at Reggie Middleton. Um, and once it's done, we it, it's narrowed down to two entities, and I'm simply waiting for the official yes. The Those who would invest would be, of course, cryptocurrency aficionados, financial guys who really, understand the network effect and the inefficiencies in the financial system, or those who probably want, a good potential return in their investment. Um, we created a report called Pathogenic Finance, and basically it details a term, a concept that I created, which is pathogenic finance, which basically um, shows what happens when you take financial transactions and you reduce the cost and the friction to the extent that it can be spread like a virus quickly. Think of a video and a video on YouTube that goes viral. The reason it can go viral is because, unlike in the past where you had celluloid film and you had to make copies of it or even put it on DVD and physically sell it. Now you could take a YouTube video, you tweet it, SMS it, etc., and they can spread. You could have hundreds of thousands of views from just as many people, literally within minutes. Okay, you could do the same thing with financial transactions now through Veritaseum with the HTML thin client. You can, if you want to expose it to a large amount of people, to a large amount of assets or a single asset, you can text it or tweet it out, and you can get exposure very quickly to a lot of people for literally pennies. This pathogenic finance concept flies in the face of everything that people think of when they think of legacy finance. You have full control of your assets. You don't pay a lot of money. You don't need intermediaries, any banks, brokers, exchanges, etc. And so, if anybody who's interested should read this pathogenic finance report. There's a short video version, but at the end of the pathogenic finance report, after explaining how it works, the advantages and disadvantages, there's analysis on intellectual property and patents. And basically, I had my analysts and IP attorneys go through about 230 patents filed between 2008 and December of last year. And it it basically shows who's really been taking this seriously. And it shows Bank of America, who filed 15 patents and have 20 more on tap, Goldman Sachs, New York Stock Exchange, IBM, what these patents are, in detail, and summarizes them. And it gives you a peek into how seriously, the finance and technology world has been taking Bitcoin, as far back as 2014 and 13. And most interesting is, outside of saying how seriously everybody took it when a lot of the media was poo-pooing it and talking about Mount Gox, you had the biggest and most powerful banks and technology companies in the world, filing patents. But the most innovative patents and the earliest filers came from small entrepreneurial companies. I'm not going to mention who they are, but anybody who's interested in investing, I'll give you a hint if you contact me.
All right. Thanks a lot for coming on today. I want to thank everyone for watching. Make sure to give us a thumbs up. Also, remember to subscribe to this channel, the World Crypto Network. Also, check out in the description. I'll put some links in the description for you to follow about what we were talking about today. Thanks a lot, and talk to you next time. This episode was brought to you by Gold Crypto Note, democratizing immortal gold and cryptocurrencies. goldcryptonote.com. Definitely check them out. There you can get these notes that are made of gold and also have cryptocurrencies in them, kind of like a coin, but even better. And each one is 1/10 of a gram of 24 karat gold. Check that out, goldcryptonote.com. Thanks a lot for the sponsorship. Check them out.